Welcome to the Growth Minded Accountant podcast, where our experts will share best practices on running your firm in the digital age. This podcast is brought to you by CountingWorks Pro. Let's get started.
So hello, everyone, and welcome back to another episode of the Growth Minded Accountant, where we talk strategy, tech, and smarter ways to grow a modern tax firm. Today, we're going to tackle the big, beautiful bill, as it's called, as it's taking shape in Washington, D.C. I am your host, as usual, Lee Reams, the second founder and CEO of CountingWorks and our sister company, TaxBuzz. And today, I'm sitting down with Lee Reams Sr., our Chief Technical Officer, to unpack what the Senate is doing with tax reform, how it compares to the House version, and what all this means for your clients and your bottom line. So, a spoiler alert, this isn't just political noise. It's an opening for proactive advisory, trust building and real revenue potential. So we're going to tie in how you can utilize tax reform to offer some new services, perhaps some new consultations, some advisory services, perhaps getting clients that are currently in tax prep over to a tax planning meeting. We'll break down how smart firms are using this timely advice, personal tax forecasts, using AI tools to assist them, and offering some of these new high value offers. So let's dive in, Lee Sr. So let's talk about this. What's likely in the Trump tax plan? Obviously, the Senate and the House bills are actually becoming a little bit different, and I wanted to get your insight on kind of what the latest is, and please update us.
Sure. Well, I think the biggest deal is the SALT deduction cap. The Senate bill has it at 10,000. The House bill has it at 30,000, with talk of making it 40,000. And if it increases like that, of course, it's going to make a lot of people be able to itemize their deductions again, which they were not able to do before. So instead of having a bunch of short forms, we're going to have a whole bunch of itemized deductions now. So that's one of the bigger issues. We also have the bonus depreciation coming back, retroactive to I think what is it, January 19th, I think it is, of 2025. I don't know why they picked January 19th, but I guess they had some reason. At any rate, that will come back, and that is a big deal for business owners because it is retroactive and it will apply to 2025. So it's quite a big deal. And of course,
Is that date, real quick, is that date when Trump took office or right around then? There's got to be something to it, and just adding more complexity, I guess, but go ahead.
I suppose, yeah. And then of course, they both want to boost the child credit temporarily through 2028, but the House wants to do it at 2,500 and the Senate wants to do it 2,200. So I think we'll have an increase, but it'll probably be maybe in between those two, like 2,300. Maybe in reconciliation, they'll decide to split the difference. Who knows? Right?
Yeah, is that what they will do with SALT as well? So it's interesting. This is the first time I met my high school friends last night for dinner. We try to keep up as much as possible. With Gale, Bloodgood, and Stuber were there, and instead of talking about Ohtani pitching for the first time since his injury, we're sitting there talking about the big, beautiful tax bill and how it's going to affect all of us. Whether it's you're working in the real estate industry, you own your own company, you're a movie producer, whatever. And it was quite interesting. Are there anything that is like big issues that higher earners should be worried about, or should be taken advantage of it? Or anything that they should start actually maybe planning? These are the alternatives. If this happens, we do this now, maybe. How would you kind of deal with this with your client as far as a consultation point of view?
Well, one of the biggest issues, of course, is not business, but a individual issue is the bill cancels all the environmental credits as of the end of 2025. So if somebody wants to, for instance, put in solar, they got to get it done before January 1st. And a lot of people don't realize this, but they don't get the credit until the installation is complete, and isn't complete until the building inspector signs off on the installation. So that's a little extra incentive to get going on it now. Plus all the energy improvement for the houses is also being canceled. So those that are watching those ads on TV for putting in new windows and doors, they better get busy if they want to get a credit.
So you're saying it has to be completed this year, not necessarily started this year and completed in order to get the, to
Yeah,
complete it in 2026.
it's got to be completed. Yeah. And then the other biggie, of course, is the cancellation of the EV credits, which would terminate at the end of this year as well, except for companies that have not sold 200,000 or more of them in the past, and they would still be able to get credits in 2026. So that's another big issue. So of course,
That sounds like an anti Musk Tesla deal right there. If you want to get political, but is that, I mean, so companies like Rivian that sell less than 200,000 units right now or deliver less, or Lucid, you're saying could still take advantage of this into 2026, but a high volume player like Tesla would not. Is that what you're saying?
that's correct. But remember, we're talking about if. All these are if. So uh, the bill hasn't passed yet, so we're just going to see what's going to happen. So.
Well, let's talk about this then from a CPA and a enrolled agent, a tax professional's point of view, and your clients. It is all about the if, right? And it's not about what's past, it's preparing for what might pass. So I think there is an opportunity for firms to creatively come up with, a tax reform package. It could be, for certain segments of clients, for my W-2 high earners. I could talk about things your taxes could jump, or they could be going down, and ways to plan around this. If you're selling a business, for example, do I accelerate that? Should I do that now? Are there things that might sunset as far as estate planning? What is your advice there from a communication point of view? And then more importantly, how could we actually turn this into a profit center? How could we take it into a billable revenue?
Well, I think part of the estate planning is which surprised me, is that they raised the lifetime exemption to 15 million. I expected it to go down, but it didn't. So obviously we're looking out for the higher earners here. So, but there's also if somebody wanted to make an issue here, I think the top things you want to talk about is the increase in the SALT deduction. So you better start keeping track of your itemized deductions along the way. And then you have the tips on the overtime and tips and overtime. But they did cap those at on the Senate bill. They capped them at 25,000 and 1250 for singles. So where the House bill doesn't do that, House bill doesn't cap it anywhere. And they added an additional senior deduction, but these are above the line deductions, so it doesn't make any difference whether they itemize or take the standard deduction. So, um, but I think the biggest thing here, of course, is the bonus depreciation. There's some other special things in there, but that and the knocking off all the credits for the environmental stuff, those are the big deals in the SALT deduction. So as
So if
far
you, okay, go ahead.
as far as taking action ahead of time, so
So let's call it, and this is what I would do. I would call it a tax reform readiness plan. And I would then say, let's create just a 30, 45-minute one-to-one planning session. Maybe we'll do some client specific analysis of what most likely could, the different reform outcomes could be. Maybe we model these scenarios, there's status quo, no changes, which at this point we feel unlikely, even though there's so much noise and posturing. I have a feeling that something is happening, and I think they can't afford not to, right? Or if there's partial reform, the 10,000 SALT, I think you're right, is the biggest issue versus the 40. If they go in between, who knows? And then maybe a full change. And then you could use tools like our Max AI to create a personalized action checklist. And are there any multi-year possibilities from this? So, would you, um, start offering that as a service. Maybe it's a billable time, and it could be an upsell to get clients that are higher earners into your quarterly tax planning type packaging. What would you use, and how would you use Max? I know you're using Max and you train Max, obviously. How would you use that as a tool to do that type of consultation and perhaps even again a revenue opportunity?
Well, I was just glancing over all the changes here. There are some additional ones we might want to think about here too, and that is the uh, the bill contains a whole bunch of stuff about aliens not qualified for the Medicare, the Medicaid, excuse me, yeah, Medicaid, and being able to get the credit for insurance with their with the insurance the government insurance program. So and that's going to be a big deal too. And they made some they did knock off all the what we used to call tier two itemized deductions, which were suspended during TCJA through 2025, and they made those permanent. But the interesting enough, the Senate version allows a deduction for educators. They can still take their expenses as as a deduction. So I they don't say anything in the bills yet about that, but I think maybe that would knock off the $300 deduction they get for above the line and let them itemize all their actual expenses, which is a big deal for educators. So that would be a big one to talk about with your clients ahead of time who are teachers and professors, so they can get they need to start keeping the records. Yeah.
You're just saying that it's because of the old law that they weren't anymore. They were just limited. And now if it does happen, so that would be a good segment. So when it comes from a marketing standpoint, from what you're seeing in the Senate and House bill and what we think might end up, do you start saying, hey, these are W-2 household clients? What is their profession, perhaps? How could certain areas affect it? Would you then start creating a consultation or some content around these issues? What might happen? And hey, you need to at least proactively start doing this. So at a bare minimum, you should be educating your client base right now about the potential and why, if, again, this isn't happen, we're not making decisions perhaps based on what ifs, but if it does and you didn't start, you're going to lose out on significant amount of deductions, for example. So, how would you analyze your client base? Would you put your high earners in one, dual income in another, business owners? You got the bonus depreciation. Obviously, I think could be a very huge number. Obviously, if SALT is at 40, there's a whole, your high state tax clients are going to be interested in this. But how would you segment and perhaps kind of tailor this meeting outreach or this potential revenue meeting around each audience?
Well, I used to do about 800 returns myself, so had a lot of business clients. I think what I would do, put together a letter, just briefly go over all these new tax laws that might pass, and suggest that the clients they might want to come in and for an appointment and discuss how they would impact them personally. So, but I just go through all of this because there's a whole bunch of them here. Because we got the extra enhanced deduction for seniors. They're getting rid of all the miscellaneous itemized deduction permanently, so they don't have to worry about that anymore. You got the new estate planning numbers we got to deal with. And even discussing people about using if they had a deceased spouse, they still got 5 years to go back and pick up that deduction for themselves as well. So it may be a little explanation about that, because a lot of people don't understand the implication of that after they pass away. And they got that new Trump accounts plan too. It was supposed to be called MAGA accounts, but now I think it's going to be called a Trump account. So
Why not? Why not call it a Trump?
so
And what is that? That's $1,000 for
well,
each
no,
kid?
they're allowed. You're allowed to put $5,000 into the account every year, the parents or relatives, and the government will put in 1,000 for newborns, which is kind of interesting. That there's a little on the spending side there as opposed to cutting the cost, but and then they go up till they're 18. And then once they're 18, they can take out 50% of it for education and buying a home. And then after they turn 30, they can take it out for any reason. So what's
So is
left?
it like a 401k plan, a
It's
529
kind of
plan
like
type
a
of thing?
401k tied into a 529 plan. So
That's interesting. So going to seniors and boomers, what are the issues in the tax code that would affect them? Obviously, we have a large aging population. A lot of CPAs, accountants are dealing with their boomer type clients. So they may be selling their businesses right now. They might be retiring. They might be considering how they're pulling Social Security out. Do I wait? How much do I, at what age do I start drawing? IRAs, all these kind of things. How is this affecting the boomer side?
I don't think it's affected that much. I think that's normal planning, which everybody should be doing anyway. Uh, the only difference there is the seniors get additional above the line deduction for, according to the House, it was 6,000. No, excuse me, the House was 4,000 and the Senate made it 6,000. So it's interesting how one of them makes one thing higher and the other in the Senate and the House they switch off with which one makes what higher or lower. So uh,
Well, it's called politics.
yeah, I
This is
guess it
called
is.
it's definitely not a perfect system
Yeah.
um, at all. So
Oh,
do
oh,
you
there is one more thing I forgot about here, and that's that they're bringing back the get you call them QOFs, it's qualified opportunity zones, and you can make investments in those types of things, and it follows. The way I read it, it follows the old rules, but just starts over with a new plan. So, but they're restricting it more to what it qualifies as the areas they can qualify in, mostly rural. I want to make it mostly rural. So, but that is coming back as well. So,
again, I'm sure that was part of a negotiation. You give me this and I'll give you that. So do you think and they're not just doing the uh, extension, they're making this stuff permanent now. So we're not having another cliff of in 5 years or 10 years. Obviously, the next election, who knows, the tax code could change again. But at this point, the goal here is to make this reform permanent, correct? And can you
not not,
explain kind of how that works?
not all. Some of these provisions will terminate in 2 or 3 years, right after Trump's term is
Oh, you
up.
mean like the tips?
Huh?
Like the tips?
Yeah, yeah. So they're not all permanent, but the itemized deductions, the tier one, tier two, those are made permanent. But it's permanent until Congress changes the rules. So nothing is permanent.
Right. Well, that's what's the beauty of obviously for our profession is stay up to date and advise clients. And you look at time horizons. So if you were working with clients right now, are you saying, hey, let's just plan 2 to 3 years out? Let's look at what any life decisions you're making in that period of time. How, do we take advantage of these things? Kind of how would you dissect that?
I think all your clients are going to be worried about how this is going to affect them personally. So I think if you send out this list and you say you want to make an appointment, come and see how this is going to impact you personally, we can do that. Because you will be involved with some, but not all. And to understand the tax laws is wise because that's what gets you the best benefits if you take advantage of what you can. So a lot of people don't do that because obviously they don't understand what's going on in the first place. So I just think you just offer them an opportunity to come in and talk things over, or maybe make a special price for it. I don't know. It's up to you to how you handle your own practice, but whatever.
Well, the good news is I wrote a blog article about how to package this, how to market it, what your email subject lines could be, kind of even how to price it, how to segment your client base. So that will be up on the accountingworkspro.com website. So it's definitely, I called it How to Turn the Big Beautiful Bill into Billable Revenue. So there's a whole game plan here. One thing I didn't hear, or maybe I just was reading or thinking about something else on the pass-through treatment. That was a big issue for CPAs and accountants, lawyers, and where is the House versus the Senate on that now?
On what? Yes, sorry,
On the pass-through treatment?
on the pass-through treatment?
Yeah.
I think it's posted still the same. But remember, they did extend the 199A deduction. So and that the House wanted to increase it to 23%. The Senate wants to leave it at 20%. So we'll see how that works out. But another thing I forgot about too, which was the provision in there. Right now, you have to give an independent contractor a 1099 or get a 1099K. If he makes $600 or more. They're raising that up to $2,000. So really eliminate a lot of reporting requirements. And for third-party reportings, they're raising that way up back up to somewhere in the 2,000 range as well. So all those reporting requirements that we're potentially looking at for this year would go away, and that would be retroactive to 2025 as well.
So you're a seasoned veteran. You've gone through tax reform after tax reform after tax reform, and you've been following this closely. Obviously, we have a good college friend of mine works in DC and is kind of in on what's happening. So we get some insight, at least, on how these negotiations go and with the timing of this, will it get through or not? And obviously, we saw the Trump Musk blow up that somehow disappeared into the headlines of the riots, and now obviously the Israel conflict. And it's like, the noise and the media is kind of died down and is not really covering the big issues here. To me, is the deficit. There's a lot of discussions about the CBO and how much debt this will. I think the latest CBO on that, the Senate version, was like 2.8 trillion over 10 years additional debt, though they use different growth rates for GDP. The argument is, well, if we're blowing that out by a percentage, we're not going to have that kind of deficit, blah, blah, blah. So anyways, there's a lot of politics. But in your point of view right now, as you see the House and Senate, where do you think this is going to end up? Or do you think, A, they're going to pass it? And then more importantly, are they going to make July 4th? I doubt it, personally. It's very close right now. Is this something in August? So as a tax accountant, maybe you start taking advantage of this right now, and do some proactive planning and offering these appointments and, have the next couple months fill up your calendar. But what is your thoughts just watching this whole process based on what we've seen in the past?
Well, first I got a hold of the House model, and I spent a week going through that, and even already gave a little short seminar on that, on all provisions in that one. Which, if anybody's interested, is available on our website at taxcpe.com. But then when the Senate bill came out, I walked through it through my original course that I did on the House, just who the changes are, and I'm not that many actually. They're pretty close to being the same with a few major adjustments, which I think the biggest one was the SALT, and the rest of them are pretty much about the same. So just a few $1,000s off each one. So I don't think it'd be too hard for reconciliation once they get past the big issues here.
So even though there's a lot of posturing, you've heard this decade after decade, and at some point, this is an opportunity. Again, doing nothing, I think, would be harmful. If so, let's talk about this. If all the sunsetting starts, so the old tax laws actually will sunset if this is not passed, and we're going back to, it's a huge tax increase for everybody. How bad would that be if they do nothing and don't get this done?
Well, let's talk about some of the issues here. Let's suppose your client's putting in solar, and you don't tell him that got to be finished by the end of the year to get credit for it. So he finishes it up in January and thinks he's going to get a credit in 2026, and you have to tell him, oh, sorry, that terminated in 2025. Is he going to be happy that you didn't tell him about this ahead of time? I think he might be upset. So there's issues like that, or somebody's putting in some major internal, or somebody's going to buy an EV, you know, and they horse around. They're going to make it a Christmas gift for somebody, so they don't really buy it until maybe after the first of the year. And bingo, you didn't tell them, and they don't get a credit, and they're going to look at you like, how did this happen? You know, so there's a lot of issues here that you got to make your clients aware of that they don't get left out in dark here.
So I want to trademark this. I'm calling it the big beautiful tax planning session, and I think this is definitely something that most tax and accounting firms should look at and put together here in the next few weeks. If you need assistance putting these things together, if you're a current client of Accounting Pro, you obviously have access to Max. We're creating content around all of this, so we're producing more content than ever. And what's great about our system with Max, it personalizes it to every single firm. So our blog articles are all customized, the newsletters are customized to you. So it's not cookie cutter every article, but if you want to write your own content and updates around certain segments that fit your client base, then use a tool like Max that is trained on the code. You're throwing in all your tax planning strategies. You're basically your big book of taxes in there. We give all kinds of human insight, but how would you go about just if you were creating content and writing it for Max? Would you identify these 10 segments and then say, hey, Max, what are the topics that I should be covering for these groups? And then let's create some blog content and some outreach emails and then create a consultation plan. Is that the way you would do this if you were, because I know you're creating content around this, but we can't hit every single specialty, right? There's definitely each firm has their own niche. How would you go about, like, let's just say for the educators, like what are some issues, not just in this tax law change that might affect them, but just things they should be thinking about that you would include in sort of consultation?
Well, I think all preparers have the same problem as I do. The minute the tax bill passes, everybody wants to know about it. And that's like instantaneous, right? And I think the bill will probably be 1,000 pages or more long. So what I've done is already written some blog articles with what I think the results will be, and highlighted in yellow the parts that might change, so that I'm ready to go when time comes. As far as a big book of taxes, I've already revised about 10 chapters to include the new changes, again, highlighting the parts that might change depending on how the reconciliation works out. But I do everything I can to be prepared to go just as fast as we can once the president signs the bill.
So you're saying Max is going to be up to date pretty quickly. You're promising Max is going to be trained on the big beautiful bill tax changes almost immediately.
We're gonna feed Max the big beautiful bill the minute it passes. So and that it'll have it in there right away. So
And plus all your analysis, which is brilliant.
right.
So I think I've covered most of it. Is there anything we've missed on kind of the House Senate versions that are important that we should highlight, or should I just kind of wrap this thing up?
Um, Look into list. I think, well, you got the tax rates will be about the same. The salary deductions are going to go up a little bit again, and they got the enhanced deduction for seniors. Personal exemptions are gone permanently, but remember, personal exemptions still get used elsewhere in the tax law, so it still exists, but it's just not a deduction anymore. And then you got the extension of qualified business income and estate and gift tax exemptions, extension limitation deductions and qualified residence interests. They left that at where it was before, so we won't get the equity debt back like we were hoping we would. And the casualty loss deduction remains the same, which is sad because if your house burns down in a wildfire disaster area, you can take a deduction. But if it just burns down, not in a disaster area, you don't get a deduction, which seems a little unfair. But
Yeah, explain that one to me again. Like I'm a 2-year-old to understand. I don't get that. But yes, it is wild that they make rules like that.
well, they made the rule that you can't take a casualty loss as an itemized deduction unless it's in a disaster area.
Some people might be making disaster areas. Who knows? All
Right.
right. I'm going to wrap this up. So,
Okay.
kind of my final message here is, this bill or rumors of it, is your marketing moment. Okay. So, I don't want your clients relying on CNBC snippets every day to get their tax advice. All right. So, let's not wait for the legislation. Let's lead your clients through this fog, through this noise. Position your firm as one who's already thinking five moves ahead, right? I mean, you're going to get more referrals. My CPA is reaching out. We're already planning. Did your, accountant do that? No, my accountant doesn't even send me a newsletter, right? So there's a lot of opportunities. And remember, content and more content plus a cadence, meaning being consistent. What that does for you, it equals authority, both online, so how the search engines index you, how AI search will reference you in. I mean, that's a huge amount of volume right now, and your clients are there. I hope to God they're seeing content that you've created. And what does this mean? A higher ROI for your practice. So, again, thanks for joining us for another episode of the Growth Minded Accountant. I hope you found this one valuable. We kind of pigeonholed a little bit of tax update. I know not too detailed, and how to monetize this in the marketing side. So until next time, please keep viewing. Our viewership continues to grow. Last week was actually our largest overall audience. So hopefully we continue to have success and you as well. Thank you again. We'll talk to you guys later.
Take care.